G'day and kia ora everyone. My name is Sanjeev and welcome to the Engineered Investments channel. At the end of this video, you would have gained objective insights into Data 3, a technology listed ASX company. Looking at the establishment metrics, Data 3 was established in 1984, or 37 years ago as of 2021, through the merger of two Queensland-based firms, an IT consultancy and an IBM typewriter distributor. Here's a fun fact. According to their website, the hash 3 in the name Data 3 was inspired by the IBM keyboard, which they first distributed in the 1980s. If you ever look at a standard keyboard today, the 3 key still has a hash symbol on it. Headquartered out of Brisbane, Data 3 provides software communication and cybersecurity services to the government, education, healthcare, and resources industries. They operate out of 9 offices across Australia and Fiji, employing roughly 1,200 staff. They currently ranked 344 by market cap out of the 2,200 plus ASX listed companies. Looking at the front metrics, dividends have been paid continuously over the last 5 years. In addition to this, there's also been a steady increase in dividend payments during this time frame. The share price has grown 263% over the last 5 years. If you had purchased shares in September 2016 for $1.46, as of August 2021, your share price would have increased by this percentage to $5.30. The 2021 revenues increased from the previous year by just over $330 million. Data 3 outlined this increase was underpinned by a strong services offering and an accelerated demand in cloud-based infrastructure within their government-based customers. They also mentioned there is a significant backlog of orders that could not have been delivered before the end of the financial year due to the supply chain issues they faced, which was triggered by the global shortage of computer chips and the work from home situation. This backlog is expected to be cleared moving into the next financial year, which could provide a healthy head start into 2022. The earnings before interest and tax increased by 3.6 million, sitting at $37.7 million. The profits before tax landed in at $36.9 million, an increase of $13.3 million from the previous year and twice that of 2 years ago. Consistent and significant gains in profits typically signals a sustained customer demand, and in our current circumstance, also a strong recovery in the market sectors that Data 3 operate in. Looking at the shareholder metrics, the return on equity ratio has remained stable at slightly over 45%, indicating extremely healthy profits from the assets owned. The debt to equity ratio has remained nicely tucked under 65%, a value we use as a rule of thumb for technology companies to ensure shareholders' equity is not likely to be impacted if the debt repayments were to drift upwards. The earnings before interest and tax margin, or EBIT, has remained stable, adding another positive dimension when attempting to gauge profitability versus the pre- and post-tax profits. The gross margin has decreased due to the revenue sources that generated the initial profits for this year. Whilst 10% is still considered a healthy figure for this type of a business, or at least a technology business, it is worth noting that this value is also lower than 2019 as well, something we need to keep an eye on in the long term. Profit after tax, or the take-home pay, has increased by $1.8 million when compared to the previous year, A nice result considering the virus speculation was ripping through the country. So what's the outlook? Well, Data 3 appear to have remained unfazed during the economic downturn and recession, showing strong market resilience and continued growth. The recent annual report outlines strong recurring business, a work order backlog, and an established and experienced executive team with an average tenure of 28 years. In summary, dividends have been paid continuously over the last 5 years. The share price has shown strong growth during the same time frame. The front metrics are where they should be, with a $330 million increase in revenues from the previous year and a doubling of pre-tax profits from 2 years ago. The shareholder metrics are suggesting excellent profits are being extracted using the shareholders' equity, in addition to ensuring a healthy take-home pay. These characteristics typically signal a high potential for stock investment. This brings us to the end of the video. Please do like and subscribe. Thank you for watching. See you next time. Ka kite ano.